Hello everyone, and welcome to this video. This video is going to be a bit of a longer one. It's going to be an introduction and kind of showing you how we see the markets when we do chart analysis. People tend to say that chart analysis is more of an art than it is a science. I guess it's probably both, but asking yourself the question like, how is it done? How am I doing it? Is it working? I think these are the right questions to ask. And since we're going to be posting many of our analyses on this channel, we plan to. This is kind of the video that will give you the anchor points and kind of the building blocks of understanding what we do, how we do it, and yeah, let's just dive right into it. All right, so I want to make the distinction between trading and chart analysis. Trading is basically the phase where you either hit a buy or a sell button, right? That's how simple trading is, and this is also kind of how the industry catches you, right? It's like, okay, just press one of the buttons. Of course, we all know basic knowledge of risk management, money management is key. That you kind of know what you're doing, and this is also kind of the knowledge that I guess you already possess when you're watching this video. If not, there's a lot of good sites where you can get good information about this topic. Sites like Investopedia. Right. So, but with chart analysis, it's a whole different ball game, because it kind of precedes the phase of actually making the transaction. And so this is what we're going to be looking at today. So what you want to do is, you basically want to look into the future and time the markets. So, and the question still remains like, okay, how do we do that? Okay, we want to start off with a trigger warning, because people do get triggered these days. Right, so we will be covering some trading strategies that people use to make a profit, and yours could be included. So if you get triggered in any way, just get to the comment section and unload fully. And yeah, we'll get back to you. I mean, we want to have this discussion, right? So if you're practicing some other method that you think is good and is also working, and you have some proof or some insights that could be useful or interesting, share them. I mean, we're all for it. Like, we're all for any method that works, right? Anything that works on the markets, we're curious to learn about it. So, let us know, and we'll have a talk about it. Okay, so first I want to get into fundamental analysis. So there's people, self-proclaimed, gurus or market whisperers, who say they understand the market, but there's always these unexpected events, so they understand the markets until they don't, right? And the best example, or one of the best examples, is right before the 2008 financial crash, where Jim Cramer on CNBC's Mad Money says, bear turns is fine. Buy some more. I mean, this is of course an extreme example. I guess many fundamental analysts, they went to school. They kind of know macro economics, which is good, which is okay, and they have a bit of market understanding, or a lot. There's people again who also have success in this field, right? And we wish all the best to them. I guess the question always is like, is this for me? Like, did I went to an elite school, or did I learn everything about macroeconomics there is to learn? If the answer is no, then that's a hell of a learning curve. I mean, I read a lot about macroeconomics, because it's also a topic of interest to me. So, and I kind of recommend everyone to do that, just to get a basic understanding of what markets are about. But making trading decisions based on this information, like, that's I guess a whole different situation, right? All right. So the next one we're going to cover is technical analysis, and this is something that kind of draws every beginner into the topic of trading, myself included. Right? It was about 12 or 13 years ago now, I guess, where this promise of having an indicator on your chart, maybe two or three, combine them, and you'll be able to make a trading decision. Well, I guess myself and also others have I guess industry-wide, it's commonly known that indicators don't really work, and why? Because they're basically a different representation of the data itself, right? So of the price data itself. So what it is, it's basically the price data goes in. There's some mathematical transformation, and then there's some some way of representing this data just in a different style on the screen, right? So in the long run, it doesn't work for making consistent and good trading decisions. That's what we found. All right. So the next thing we're going to talk about is quant and AI, and I always like to call it the next shiny object. I work in the software field myself as a freelancer, and I kind of I always pick up this sense of customers wanting AI to solve all their life's issues. And it's kind of the way people think about AI, really. So when AI systems are great, I think we all have a great experience with LLMs, and it's kind of our personal consultant in a way, and it's great. So, and if you want to use it for making trading decisions, I guess this kind of changes the game, right? So AI systems. The decisive factor, I put it on the slide here. I said, what's, I don't know, missing? No, the decisive factor is context within the knowledge domain. I put an image of the dog there chasing its own tail, right? So you start this quant and AI thing, and all of a sudden you realize that, the system, you put in all this price data, and what comes out is kind of random garbage, right? So the system needs you, to feed it market data, sure. But what it also needs alongside with that is kind of a context on how to interpret the data, right? So, and that's what I call context within the knowledge domain. So the system needs to know what to look for, right? And how to use the data, how to apply the data. So as a dog chasing its tail, you'll kind of make a circle and come back to the fact like, oh yeah, okay, so I did this training, I fed it all this data, and out comes random garbage, right? Because the statistical starting point of any AI is always randomness. Like an AI doesn't value your data, it doesn't contextualize your data in any way, it just accepts it the way you feed it into the system. So now I want to bring an example from, a market leader, Renaissance Technologies, led by Jim Simons. I mean, this is not a secret. These guys are kind of, best of the best, top of the industry. And if you look at the statistics, after fees, they bring in about like 35 to 40% annual net returns, right? Which is great. I mean, that's a great mark to accomplish. And he says like the real thing was to gather a tremendous amount of data, and he also said like having the best infrastructure and the best computers. So and then again, so the question comes back to, are you sitting on mass amounts of data, like petabytes of relevant market data, and do you live next to the New York Stock Exchange? Like those are kind of the two questions you have to realistically ask yourself. And I think if the answer to one of those questions is no, then your chances of success are kind of slanted to the negative side. All right, so that kind of leaves us with chaos, right? So randomness and chaos. Okay, damn it. So we have no real way of knowing the data that we have, the market data, like, is it random? So I always think like it might appear random at first glance. Like there's many people, also industry experts, would say, well, it's just market noise. Like, it's just random noise. You can't really grasp it. It's all just random, So I have to start by saying data is not the same as information. Data doesn't mean the same as information. Like, this is kind of the ABC of information technology. So I can tell you, like, a piece of data, say 3. Well, 3. What 3? Okay, so it's missing. It's lacking context, right? And that's the point. So data is data and not information straight away. Like, I have to give it a context. So if I say 3 sandwiches, then all of a sudden you know what I'm talking about. Like, I'm talking about 3 sandwiches. So, and at that point you have information. So that is a very important distinction to understand. Okay. So I think we neither want to, simply just transform the price data mathematically in just some other view, like some other way of representation. That's not what we want to do. And this is what indicators usually do. We also don't want to like reduce the price data to some historical average or mean. And this is what quant or AI systems kind of tend to do. What we should strive for, I think, is to contextualize the data in such a way that you're kind of looking through a lens at the data, and that you can interpret the data just by looking at it, in order for you to make well-rounded or well-considered trading decisions. All right, so we shouldn't lose track of our goal here. Like, what is our goal? What are we looking to do? And the actual thing that we're looking to do is market timing, right? We want to, time the market. So, and therefore, in my journey of kind of finding the truth about, chart analysis and trading, I found that a very important concept that we should be looking at is time itself. So understanding, right, time. Also important, both your entry and your exit are of key importance, right? So you want to not just have a good entry, because if you have a good entry and then, price moves against you at some point, then it can hit your stop loss anyway, right? So you want to have a good entry and also a good exit. And once you understand time, you can also form an understanding of price movement, right? So you kind of start off with these questions like, what is time? Who governs time? How does it progress? And then you kind of move into the realm of asking yourself, like, well, is there a relationship between time and price, right? Those are the kind of next questions you ask yourself. And then I think the final question in that sense is asking yourself, whenever I'm able to decipher the laws of time, could I then in turn do the same for price? So, these price developments, could I, pinpoint their movements in a way? So, and I'm greatly inspired by the work of W.D. Gann, who lived from the end of the 19th to like the mid 20th century. And he said the following to this topic: the market is geometric in design and functions according to mathematical law. Price and time are the two most important factors. When they balance, change is imminent. And this quote is extremely loaded with much information, and is, I think, very, very well formulated. So the market is geometric in design kind of means, okay, so there's a geometry there, okay, that we have to look for. Mathematical law, that's something we have to look for. And price and time are important factors. So probably factors, they have a geometric relationship. Okay, so we can just blindly follow one person, right? So we have to look into these topics more and kind of see, okay, what is the angle here? What are we looking for? So, and I like to kind of dive into this, material. What helps me understand these, you could say almost philosophical questions. What is time? Where does it come from? How does it progress? How can I, kind of understand these these laws, of space and time. And this is when I started looking at, Einstein's work, but also in this example, Christopher Langan, who is one of the smartest guys in the world. I think they measured his IQ, and it's the highest. I read his book about CTMU, and he said on an interview with Michael Knowles, he said reality isn't just geometric. Where the brackets are, it says something like, this is what Einstein thought, nor is it just linguistic, it's a blend of the two. So he basically believes that reality comes into existence from, controlled from some other domain that we can't really see, and is basically built out of two components. So he says it's built from like the logical spoken word and geometry. Like those are the two building blocks of reality. Okay, so Einstein, I think we all know him. He's famous for his for coining the space-time, the term space-time. He said gravitation is not a force, but it's the geometric property of space-time, where space has a geometrical relationship to time, right? This is very interesting. So this kind of gives us input as to, how we should actually look at the markets, or how we should look at the phenomenon of, not just time, but also price. So in conclusion, I think there's a lot of reason to believe that, similar to the geometrical relationship between space and time, there is also a proof for a geometrical relationship between, price and time. I haven't really given you proof yet, right? These are just, things people say, things people think, or kind of, I'm just kind of connecting some dots here. You're not seeing any proof. If you really want proof, I really urge you to look at our trading videos. Like, be critical, check out what we're doing, and kind of see if I can actually prove my point. I'm convinced I can, but I really urge you to really stay critical of this, right? So geometry in its base, it's reality's blueprint, right? And in traditional technical chart analysis, there are already some tools like a GANFAN or some Fibonacci ratio guides that should kind of help the user find these geometric ratios. So our method we call geometric analysis, and it just goes a bit deeper. It works similarly though, so it kind of works from the same, you could say, a mental starting point, if you will. Okay, so, and since we see these geometrical patterns everywhere in nature, I think this is common to everyone. Like from the leaves of a flower, the hexagons of the beehive, the snowflake. This is all known, I guess, to everyone. It's just, I guess, the question of how to apply this to the market, and this is kind of our mission, and we call this geometric analysis. Okay, just to kind of jumpstart your brain, I figured just to put in some interesting slide, just some candles, right? I mean, we're looking at this horizontal channel. And just to give you kind of an idea, or just like a question to ponder on, it's like, what do circles and waves have in common? Some of us, maybe all of us, learned this in school. Like what is this again? Like, so we have the unit circle, which is 2 pi, and a wave. So once you add time to this circle, all of a sudden you get this wave motion, right? And this full completion of the wave motion is also 2 pi. Maybe it's a bit small on the image, but you can actually see it on the right there. You can see, 2 pi. And also this wave kind of gets divided, right? So you get like pi divided by 3, 2 pi divided by 3. And it's also kind of the divisions, the natural divisions of a circle, right? Waves can be found everywhere, also in nature. Now, just something to get your brain juices flowing. All right. Geometric analysis. I touched on it before. I think I also have to kind of do some expectation management because you have to see it for what it is and also for what it isn't. It's still a work in progress. I mean, I've worked on this topic, I guess, for 12 years now, many ups and downs. Tried many methods. Many things work, many things don't work. Sometimes, some methods work sometimes, but not always. But we've now reached a stage where we can say, okay, we can actually fill this channel with content, right? So this is what we're doing here today. All right. So the egg of Columbus, I think everybody kind of knows the story where he says, like, just put an egg on its head, right? And everybody says it's impossible until he kind of cracks it, and then it stays standing on its head. That's the story of the egg of Columbus, and it's basically something that everybody's chasing. It's like this all-knowing market intelligence where I can perfectly pinpoint highs and lows, and this is also that geometric analysis cannot do at this stage. But it's certainly something that we're chasing too, right? So we want to have a perfect understanding and then calculate all highs and lows, and also entries, exits, and also of course the market's direction. But at this stage, it's simply not possible. What we can do, however, is we can calculate focused paths with that kind of limit the price movement, limits the overall possibilities in price movement. This is how I should formulate it. Yeah. So it kind of limits the amount of overall opportunity, which kind of focuses our attention. We can actually make exit decisions based on ranges that come into existence. So once you start the geometric analysis for the day, all of a sudden you kind of see these daily ranges. And sometimes it's like half a range, sometimes it's a full range, and sometimes it's like 1.5 times or 2 times the range. But at least you have kind of these range markers for you to take exit decisions, or halving your position, whatever. Market direction, we cannot with full certainty tell you a market direction, but we can actually infer it from geometrical movement patterns. So in the morning we can already see, or like at the end of the previous day, so determining, or dependent on the time of year and whatnot. But we can actually tell you what the overall market direction will tend to be for the day, right? And also a very big plus that geometric analysis can theoretically be applied to any asset class and any time resolution. So any time frame, if you will, like 1 minute or 1 day. Of course, you need some conversion work and some setup work. All right, but to test our strategy long term and also our methods, we made the following decisions. So we only trade the Forex CFD market, and specifically the Euro-USD pair. Why? Because of its high liquidity due to many market participants. It's cheap, low spreads, no brokerage fees, just overnight fees. But we tend to limit ourselves to intraday trades. I'll get into that. And also the data, we have 24/5 OTC price data. So we're not bound to any, opening or closing times of some exchange, which is an advantage for our work. We chose the highest resolution possible, like not a tick chart. Yeah, but there's tick charts. Yeah. We don't use tick charts. We chose the highest resolution possible, where we can actually get some geometrical ratio. And it's, so the intraday point, I just spoke about that. We try to close all our positions inside the same day. And then we definitely need this ratio. So, and since we're working on 1 minute charts, we actually have this 1 minute per point ratio, and we also log our charts. It's very important if you're working geometrically that you log your chart. Like if you draw a circle and your chart, dynamically resizes one of its scales, like either Y or X, that will not be a useful circle, right? And of course, we took on the biggest challenge, you could say. I mean, these many market experts, gurus and whisperers who always try to tell us, well, the 1 minute chart, that's only noise. Like, how can you get some information out of that? And we have always been, steadfast, saying, no, that's not true. It's a challenge, yes, but we can get it to work. And I strongly urge you to look at our trading videos, and you'll see it works. All right, so this basically takes me to the final slide. Hit the like button if you also think that the trading industry has really hollowed out over the past few years. I mean, there's a lot of just stories of scams and trading gurus and whatever. And I just thought this wasn't a good time to to get into the market and make trading videos if you're not absolutely sure about your method, and if your methods are still in the making. You have to respect people's time. I think you can be scamming anyone, but if you have a method ready, then and you want to present it to the world, you have to be respectful of people's time, and that's what we're trying to do here on this channel. We're trying to be respectful of your time, so we made this introduction video to kind of show you, the way we look at the markets, and it's really up to you. It's you can make up your own mind. Also, if you want to subscribe or hit the bell, it's totally up to you. We always say, sounds cool, whatever you're saying, but don't stop looking for proof. Right? Keep testing, keep validating, keep asking these questions, like whatever he's telling me, like, is this the truth? Like, is this real? You have to get validation and proof, and this is something that we want to also provide you on this channel. So we want to try and make daily videos. Sure, I'm also involved in multiple projects, doing freelancing, so it might be a bit chaotic at times, but we'll try to make it as daily as possible. And you can just see it for yourself. See how we, see the markets, look at the markets, and make our trading decisions. And if you would like to stay, updated on whenever we launch these new videos, then I think it's a good idea to just subscribe and hit the bell. All right. Wow, if you held out this long, thank you so much for tuning in, and I hope to see you next time. Take care. Bye.